What is Bitcoin? What does Bitcoin do? Is it perfect? Neither was email when it was invented in 1972.
The story of cryptocurrency began in 2008 when an anonymous figure known as Satoshi Nakamoto published a Bitcoin white paper. The following year, the Bitcoin network went live, marking the birth of the first cryptocurrency. The basic idea is that without pieces of paper as money, there needs to be some other way of keeping track of how the money is moving.
When you want to buy something normally, using your normal bank card, this is what happens. I give my card details to the shop asks the bank if I'm good for the money. The bank checks its records to see if I've got enough in my account. If I do, it lets the shop know. It updates its records to show the movement of money from my account to the shop's.
The solution is that you announce the transaction to everyone. All the transactions, me transferring to you, you transferring to another person, are clumped together in a block to add to a chain of other blocks. To add to the chain, the miners have to solve the cryptographic puzzle, which takes a lot of computational power. If they arrive at the right solution, they can tell everyone that they have the right answer and everyone can verify it. Solving the problem is hard, but once you have a solution and announce it, it can be very easily verified. A new block is then added to the chain and everybody starts using the new blockchain. For their trouble, the solver gets a bit of Bitcoin.
Each owner of each copy records every transaction.
While there's thousands of cryptocurrencies out there, there's a few major players. Obviously the biggest and most well-known is Bitcoin. It has the largest market capitalization and widest adoption. Ethereum is another significant player. It introduced the concept of smart contracts to blockchain technology, enabling the creation of decentralized applications.
The Ether token represents an ownership stake in the network, but on top of that network are all kinds of apps that get built on the network, much like the apps on your phone depend on the underlying network existing that lets the phone operate.
There are several advantages to cryptocurrencies. There's security. Cryptographic techniques ensure a high level of security for transactions. Banks have this too, but banks can fail, governments can be overthrown, and nothing beats having all your cash stored in your mattress. The pseudonymous nature of cryptocurrency provides a great deal of privacy, which is also great for crime. Accessibility, speed, transaction fees, transactions can be made 24/7, settle much more quickly than compared to traditional systems, and this can be done at a lower cost. No pesky bankers in the way. It's important to note that cryptocurrency isn't without its challenges and risks. There's volatility. Cryptocurrency prices can fluctuate wildly, leading to market concerns about manipulation and speculation. There are other regulatory concerns. The legal status of cryptocurrencies varies across countries, and there are ongoing debates about the potential use in illegal activities.
Been rife with fraud and manipulation, and look at all the bankruptcies, and you've had on this set people talking about those various bankruptcies, and it's not just one entity, it's entity after entity after entity, and then investors are just lining up in the bankruptcy court.
There are environmental concerns. High energy consumption of mining operations, especially those used in proof of work system, raise issues about the carbon footprint of cryptocurrencies. Your Bitcoin mining setup not only takes electricity, it takes resources to make those graphics cards, and there's probably human rights violations sprinkled somewhere in the supply chain. Cryptocurrency is not just a technological innovation, it's a innovation reshaping financial landscapes. Cryptocurrencies have emerged as a new asset class, attracting both retail and institutional investors. The potential for high returns has made them attractive to retail investors, but it's a highly volatile investment option. There are also market efficiencies flowing out of blockchain technology. It enables financial services without traditional intermediaries. DeFi platforms or decentralized finance platforms offer lending, borrowing, trading services, and potentially it could democratize access to financial products. There are other market efficiencies for cross-border transactions, facilitating faster and cheaper international money transfers, challenging traditional remittance systems and potentially reducing global financial friction.
The result is a cheaper, quicker, and easier way to spend money, even across national borders.
There's an economic impact. The rise of cryptocurrencies can influence central banks' control over money supply and monetary policy.
In terms of what you think is happening inside this market and whether you think it's quote unquote working.
Cryptocurrency can also optimistically provide financial services to underserved populations, especially in developing countries with limited banking infrastructure. Power to the people, but probably not, unfortunately.
Thanks to cryptocurrency, now anyone with an internet connection can trade, spend, and borrow money around the world.
We may see increased integration between cryptocurrency markets and traditional financial systems, including potential cryptocurrency ETFs. We saw suggestions by large institutions and derivative products.
Securities laws or commodities laws and so forth. So here we have an asset class, all of these 15, 20,000 crypto tokens, many of which, without prejudging anyone, many of which are actually something called investment contracts or securities.
We'll likely see the development of more sophisticated financial instruments based on cryptocurrencies, catering to all types of investors. And as the ecosystem matures, navigating this complex landscape will be key to realizing the full potential of this transformative technology while mitigating associated risks. We're seeing increased mainstream adoption with more businesses and financial institutions accepting cryptocurrencies. User-friendly interfaces and services are making it easier for the average person to get involved.
Basically, if you wanted information, you could get it from a few major players, like the New York Times, the Washington Post, and others like them. Today, thanks to the internet, information is decentralized, and you can communicate and consume knowledge from around the world with the click of a button.
Cryptocurrency has the potential to disrupt traditional finance, particularly in areas like banking and remittance services. We see further integrations with existing financial infrastructures. And there's emerging trends to keep an eye on, like the central bank of digital currencies, the growth of decentralized finance, and non-fungible tokens.
The mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet.
Lots of computers.
Education is the key to the mass adoption of cryptocurrency.
Thank you for the opportunity to speak with you today.